Okay, good afternoon, everyone. I am Bill Levinson, Managing Partner with Levinson and Associates. With us today, we have the Joseph Lochran, our Marketing Vice President. And then we have our special guest speaker joining us, who I'll formally introduce in just a few more minutes here. But we have some great stuff to go over. As you know, every week that we are on these live training webinars, we try to maximize your time and bring some new products, or let's say new sales idea, carrier, just to kind of go over what's hot, what's not, so we can save you time and you don't have to surf on the internet and check all the e-blasts and go on different carrier trainings. We simplify everything on our once a week live training webinars. So we greatly appreciate you joining us. Today we're going to run for about 45 to 50 minutes. We're giving away a free Kindle Amazon Fire tablet at the end of the call to the 100th registrant. So we'll announce the winner just at the end, which will be about 10 minutes before 3 p.m. Eastern Time. So me and Joe, we're going to talk about some new additions that we have here at Levinson, and then we're going to introduce our feature presenter of the day in just about 7 to 10 minutes here. Okay, so real quick, before I dive in, we are very, very happy to introduce our brand new, we have an exclusive Levinson errors and omissions policy. Okay, just launched. This is the first time this has ever been done on the IMO side. So it's our own E&O policy for $395 a year, $1 million of coverage, and it covers B-rated carriers or better. Okay, so that's about 20 to 50% less of a typical E&O policy. And if you're questioning the fact, saying, hey, this sounds great, but Bill, I'm contracted with 5 companies with you, and I have 2 other contracts outside of Levinson for whatever reason that is, but we do. Does the E&O policy still cover that? Absolutely. It covers all of your contracted carriers and appointments. So you don't have to worry about that. As long as you're active with us, you have full access to the Levinson E&O policy. So that is live right now on our website. You can literally go in and print your certificate, and you are up and running. If you have any questions, let us know. We'll also email out a thank you message to everybody that's on the webinar today, and we'll include all of the information that we're going to touch on, and we'll include the new details on the E&O policy, so everything will be at your fingertips. Okay, Joe's going to talk about some of our living benefit resources. After all, today's webinar is all about life insurance with living benefit riders attached, okay? The new way to sell life insurance. So we have some awesome stuff to go over. Joe's going to touch on what's available to you on the Kerry Levinson website. Joe?
Yeah, thanks, Bill. So everything we're going to hear about today, including some of the new exciting products and living benefit riders, we've actually taken all the material and put it on your back office site through kerrylevinson.com. What you're looking at in front of you is just a quick screenshot of kerrylevinson.com. I've actually hovered over the product tab. You'll see in blue living benefits. You can access every single one of those brochures, client material, agent guides. We even have pre-approach letters, some email marketing templates you can use, and even some client-approved videos in mailers. So all that is available 24/7 on kerrylevinson.com. Of course, like Bill mentioned, everything we're covering today will be sent to you in an email, so you can easily access all those resources and kind of have them at your fingertips.
Okay, thanks, Joe. So our go-to carrier, okay, and the feature presentation today is all about John Hancock, okay, life insurance with long-term care critical illness riders. First, top right side, John Hancock, and then the carriers below Hancock you also have full access to. On the left side, those are our standalone long-term care products, okay? Genworth is not in Florida any longer, but we do have Transamerica, Mutual of Omaha, and NGL. So if you do have any questions with a standalone LTC, or of course life insurance policies with living benefit riders, just let us know. We can send you out some illustrations. And again, everything is available on our website as well. Joe's going to touch on some other link benefit resources that are available to you, just so you know your way around the site a little bit more. Joe?
Yeah, thanks, Bill. So on that same product tab that we looked at earlier, we've got a section there called linked benefits, and these are going to be our products that kind of combine life, long-term care, some accelerated benefits, great for single premium type products, great annuity alternatives. Those are also available 24/7. We even have some upcoming webinars with the Minnesota Life product, which was just approved in Florida last week. So we're very, very excited about that. But of course, I wanted to show everyone where that is on the website underneath that product tab. So you'll have full access to that as soon as we're done with the webinar. You can go and access all that material.
Okay, good stuff, Joe. Okay, so I don't want to steal any of his thunder, but I am going to give you a 100-foot overview on what today's presentation is about and who is speaking. So first off, we have Andrew Spiro, our regional director from John Hancock. And the reason why we invited them to join us today, first of all, they have one of the best ratings in the industry at A+. And they've held steady for many, many years now. So our hat goes off to them just for that. Also, a brand new IUL that is simply a game changer in the industry. He's going to touch on that. We're going to go over life insurance with LTC, CI, living benefit riders. They have a real neat vitality program, streamlined underwriting platform. Great, great stuff to come. Also, right when Andrew's done speaking, we're going to show you exactly how to dive in and get your 1,000 prospects every month that you can market to with some of these life insurance policies with living benefit riders. These are 1,000 free prospects every month. So you're going to use some of Andrew's ideas and thoughts, and then you're going to dive into the agency automator platform to start turning these prospects into leads this afternoon. Okay, without further ado, I'm going to introduce our Regional Vice President from John Hancock, Andrew Spiro. Andrew, you there?
I'm there. Thank you, Bill. Can everyone see my computer?
Yep, we are good.
All right. All right. So we're going to get going. First off, many thanks. We're very fortunate to have wonderful partners in Levinson & Associates. Bill in particular has been a strong supporter of us, and we have a great partnership. So everyone's in great hands. You have a phenomenal GA that we're very proud that represents John Hancock. So I can't tell you how excited I am, Bill. We are, we're in a new world right now. We're in a world of, living benefits, as you said, and we're going to talk about why life insurance is all about the living, not just the death. And we're going to start off with, I think, something that's going to make hopefully everyone on the phone very, very happy. For anyone, any agent, Bill, that adds vitality to a permanent sale, they're going to make an extra 10 points up to target premium, paid directly from John Hancock 30 days after the case is placed. So there is no cap other than the vitality cap, which is 20 million. So if you have a case, Bill, it's 100,000 in target, the client's paying 100,000 in target, John Hancock will pay the writing agent, whose ever name is on the app, an extra $10,000. It'll probably be in all ones in a brown paper bag with the guy with dark shades coming to deliver it, but it will be paid 30 days later to the writing agent. Again, no cap, they'll get another 10 grand. So an extra 10 points if you add vitality. It's a great service for your clients. At the end of the day, it'll help them live a longer life, which we want them to, and hopefully your clients want to live longer as well. And to be honest, it's a great service for your agents, because the reality is that instead of interacting with John Hancock once a month, our vitality clients interact with John Hancock 21 times a month. They're checking our website. They are essentially redeeming rewards and gifts. They're checking their vitality status. And when they do that, they're thinking of the agent, and they're thinking of, candidly, of Levinson Associates, and they're thinking of John Hancock. And the more they think of us, the more referrals, more sales opportunities present themselves. So an extra 10 points, you don't need to do anything but to simply add vitality. For those of you who recall, vitality, essentially, you earn points by doing healthy daily activity. And the more points, vitality points you earn, the greater the vitality status. We have 4 statuses: bronze, silver, gold, and platinum. You can add the vitality rider at bronze, which is assuming that the client does absolutely nothing. and they'll receive a benefit, a premium discount based on what they actually achieve if they do, and you'll still receive the extra 10 points. So essentially, bronze is no discount, no premium discount, no points. Silver is 3,500 points and roughly a 5% COI discount. Gold is 7,000 points and roughly a 10% COI discount. And platinum is 10,000 points, roughly a 15% COI discount. And you can use that discount to either lower your premium. So with $100,000, at gold, you could pay $90,000 if you're the client, or you can use it to create more income. So if you're pulling out $50,000 a year in income for 20 years, maybe you can pull it out for 30 years, or you can pull out, say, $60,000 for 20 years. You can use it to make a 10 pay into a 6 pay or a 5 pay. So there's a million different ways you can use it. So I'm going to tell you a quick case that we just did here in South Florida. We had a female. She was 60 years of age, in relatively good health, a little bit challenged for her height and weight, but we got her for fur with a little kind of a squeaky wheel, little elbow grease, and she needed $20 million of insurance. This is a big case. This is a career case. She lived on the Intercoastal in Boca Raton, Florida. She was worth about $150 million, and she was earning a tremendous amount of returns on her real estate, but they did not have a ton of liquidity, and they knew they had a big estate tax issue at death. So we were going to get the case. Our premium was $240,000, and the next closest competitor without Vitality, we were $240,000. The next closest competitor was about $290,000. So we're about $50,000 less than anybody else. And I was brought in to talk about Vitality. And this is how I sell Vitality. I'll be very brief here, but I essentially said to the client, there's an old way of doing insurance. And the old way of doing insurance, we interact with you once a year. We send you a bill, you send us the premium. And our premium is $240,000, which is obviously the cheapest in the industry. The next closest was $290,000. But I said there's a new approach. A new approach requires some engagement on your part, but it's minimal. It might take a couple minutes a month. And instead of paying $240,000, you can pay $217,000. That was essentially a 10% savings per year. So if she lived 10 years, she'd save essentially $250,000. If she lived 20 years, she would save $500,000. You get a discount day one and every year that you qualify going forward. In addition, you can get rewards such as travel, entertainment, shopping rewards, in addition to the premium discount. So I said, would you like to pay $240,000, or would you like the new approach and pay us $217,000? She said, of course, I'd rather pay $217,000. And then they say the same thing every time. What's the catch? So I explained to her, I said, I have 3 questions for you to see if you'd be a good candidate. 1, I said, do you care at all about your health and nutrition? She said, absolutely. 2, I said, do you exercise on any kind of regular basis? You see go to the gym, go for walks, go for a bike ride, do yoga. She said, I actually go for walks 3 times a week. I'm like, perfect. You don't need to do anything else. 3, I said, do you see your doctor at least once a year for a full physical? She said, I have a VIP doctor and I go usually 2 or 3 times a year. I said, you're a perfect candidate. All you had to do was say yes to one of these and you'd be a great candidate for the rider. But with you doing all 3, it's a no-brainer. Keep doing what you're doing. You're not going to have to change a thing. And that's the beauty of this rider. Most of our clients are doing what needs to be done anyway. So they're going to get rewarded for doing what they're already doing. And for those who aren't, they probably should. And I basically just went over with her the easy ways that when she goes to the doctor, she can just record that information versus with the app that we have, just simply taking a picture, and that would satisfy the goal requirement. Or if she's willing to wear a Fitbit when she goes for the walks, that would satisfy essentially her exercise requirement. And for her, it was a no-brainer. We sold the case, a couple $100,000 in commissions for the agent, and the client couldn't be happier. I'm proud to report that she not only hit gold, but she's been hitting platinum, which means even a further premium discount to her. So it's a really cool concept. We can talk about it in more detail at another time. Maybe Bill would do a separate webinar just on Vitality, but it's a new way of selling insurance, and it really now is providing an extra incentive for the agents to talk about with the extra 10 points paid directly to them via John Hancock. Okay, for those of you who are not aware, we now have a paper ticket. The days of doing applications could be long gone. There's e-apps, but the paper ticket essentially allows you on any client, any face amount, any age, for any of our single life policies, not second to die, any of our single life policies, you can drop a paper ticket instead of doing an application. So you can have a 90-year-old client applying for $50 million of death benefit. You never have to do an app again. You can do a paper ticket. The paper ticket is just a couple pages long, and by doing the paper ticket, you can avoid the app. We essentially get the ticket within 48 hours of us receiving the ticket. You submit it to Levinson Associates like you do any of your other business. Levinson Associates transmits it to us, and then within 48 hours of us getting the ticket, we then call the client and do the application over the phone. So it just is for some of your clients, it's an optional choice. You don't ever have to do an application again if you choose not to. Now, the benefit of doing the ticket is if your clients are, if you do a ticket and your client is 60 or less and the face amount's $1 million or less, then we will pull those cases out after we do the phone interview, after we do the phone app, and we will see if we can qualify them for express underwriting. So for clients, again, 18 to 60, and for face amounts $1 million or less, we will pull those out and see if we can do express underwriting. We do an internal MIB, an internal inspection report. We do essentially an RX search, so we see what prescriptions they're taking. And we look at the part two when we do the phone application. And if they appear to be standard or better risk with not complicated history, we can issue those cases in as little as 3 days, and your agents get paid in a week. So two different parts of the program. One, never have to take an app again for any age, any amount. Two, you can just complete the ticket. Two, if you do the ticket and your clients are 60 or less and it's $1 million or less, you have the ability to issue in 3 days or less. Submit the ticket to Levinson Associates. When we get the ticket, we call the client, do a phone interview. If they qualify for express underwriting based on them being standard or better risk, and they're 60 and under and $1 million and under, then we essentially will let Levinson, let the agent know that the case has been approved through Express Track. Policies issued in three days. You get money on delivery and signatures on delivery, and you are done. If the case doesn't qualify for Express Track, it just proceeds to new business and traditional underwriting as necessary. Things which would prompt traditional underwriting, if you have a client that you're hoping would qualify for Express Track, medical impairments such as diabetes and cancer, stroke, lupus, COPD, CAD, ulcer, colitis, fatty liver, hepatitis, heart murmurs, valvular disease, and rheumatoid arthritis. And then non-medical impairments like aviation, professional athletes and entertainers, DUI, bankruptcies, hazardous occupations, criminal histories, premium financing, increasing riders. And if someone was submitted recently and declined from another carrier or rated, we can check that through the MIB, history of substance abuse, or complex ownership structure. So in your mind, if it's a complicated medical case or complicated financial case or complicated design, probably will prompt traditional underwriting, even if they're under 60 and under $1 million. So this is kind of examples of automatic knockouts to our Express Track. But the beauty is our Express Track does offer standard plus, preferred, and super. There's many other companies that just have preferred or super preferred or bust. We will allow standard plus, preferred, or super. This is a sample of the drop ticket. So instead of doing a 30-page app, it's simply 3 pages, and then essentially it has the HIP and the authorization, and you're done. It will take you less than 5 minutes to complete, and you can move on to your next case. So if we need further training on that, contact Bill or Levinson Associates, and they or we can work to provide further training on how to complete the ticket and who would be eligible, and go in a little bit more of a deep dive about express underwriting. Okay, long-term care, one of our most popular living benefits. I would say that 1 out of every 4 policies I sell has the long-term care rider. So why do people, why do they want or need long-term care? Well, we know 7 out of 10 people age 65 and over will need long-term care at some point in their lives. There's 78 million baby boomers that are retiring over the next 2 decades, so this opportunity has never been greater and bigger. And the national average for 24-hour home care is over $102,000, and Florida is even greater. But that's not the reason people buy LTC. People buy LTC so they can get the type of care they want in the setting that they want, which is generally their home. And our product will provide that. So what are people's options these days? Well, they can self-insure, but it's super risky. They can rely on family members, but that can impact their emotional and financial and physical well-being. They can buy a standalone LTC policy, but obviously if you don't use it, you lose it. The rates for those policies are not guaranteed. I know we've gotten out of that business, and a lot of carriers have, and the pricing has gotten very expensive. Medicare, typically only covers up to 100 days, and it's only for if certain conditions are met. And Medicaid really is not our clientele. And, some of these elder care attorneys, they make it sound easy, where we're just going to spend all your assets. The IRS is looking at that stuff. It's just not a really good viable option. And we have a much simpler, easier option, which is John Hancock with the long-term care rider. So how does our rider work? It turns the death benefit into a long-term care benefit pool. And all you're simply doing is accelerating the death benefit. So if you bought $1 million contract, the $1 million is yours when you die or while you're alive to reimburse for LTC expenses. It comes right off the death benefit. If you have an LTC claim, you're able to accelerate that death benefit at a 1, 2, or 4% clip per month up to $50,000. So what that means is if you have $1 million contract and your acceleration, which you do at time of application, is 1%. That means you can get up to $10,000 a month. 1% of $1 million is $10,000 a month. 2% would be $20,000 a month. 4% would be $40,000. It's reimbursement. So if you elected the 4% rider, which gives you $40,000, but your expense is only $2,000, that's all you get. If your expense was $2,000, your death benefit goes from $1 million down to $998,000. So it just reduces the death benefit dollar for dollar, and the money is given to the insured on a tax-free basis versus having to sell stocks maybe in a down market, have to pay capital gains. If you're using money from your pension plan or your IRA or your 401k. So essentially, the insured pays a premium. He buys a life policy. There's one extra page of the app where you apply for LTC. We do look at morbidity as well as mortality. So if you're walking with a cane, you won't qualify. It's available up to age 75 to a maximum rating of Table 3. And any portion that's not used for long-term care just passes down to the family in terms of the death benefit. So if you bought $1 million contract and you needed half for LTC expenses, then you would net $500,000 to your family. So if you don't use it, you don't lose it, unlike a standalone LTC policy. So there are different types of riders out there. There's non-qualified and then there's qualified riders. Non-qualified riders, the main issue, candidly, is that you do have to have generally a permanent condition. So if the doctor says, you're going to be laid up for a couple of years, but you should make a full recovery, you won't be able to get a benefit. But the big issue with non-qualified riders that are offered by Lincoln and PAC and Penn and Protective and Prudential is that the rider charges can be taxable. Then you have qualified riders, and it's really easy because you have indemnity riders and you have reimbursement. We are the only company that does a reimbursement rider. And the advantage of a reimbursement rider over an indemnity, and there's pros and cons to both, is that a reimbursement rider is not subject to the IRS per diem limit. So the IRS per diem limit, I believe right now, is $10,750 per year. So with us, we can go up to $10,750 per month. With us, we can go up to $50,000 per month. So I always use the line, Bill, that if the IRS told you how much you could spend on your next family vacation, probably wouldn't be that great of a vacation. Our clients now, with that extra pool of money, get the type of care that they want, again, in the type of setting that they want, which is usually their home. The other advantage of a reimbursement rider is that the LTC rider rates are fully guaranteed. An indemnity rider is not. So if you buy a guaranteed UL, and like a nationwide product, and you add the LTC rider, then by default it becomes guaranteed. But the reality is, if you're doing an index product or any other type of product with them, their rider rates are not. Our rider is guaranteed. No matter what happens to the performance of the contract, the rates of the rider for the long-term care rider cannot change. And speaking of rates, the other big advantage is our cost. Generally speaking, the indemnity riders are anywhere from 20 to 50% more expensive than our rider. Our rider is generally an extra 7 to 9% of cost, and your target premium goes up by about 10% when you add it. So what sets John Hancock apart besides the fact that we're reimbursement? We know this market. We've priced our product right, and that's why we can guarantee the formula for the LTC rider. We've paid out over $9 billion in LTC claims. And, we're taking the onus off of the insured. Instead of having to pay back the insured, because we've been doing this forever, we will allow the clients can allow John Hancock to work directly with the care providers and reimburse the care providers directly. So the clients don't have to come out of pocket and pay the money. We can actually get billed by the providers and reimburse the providers directly. We also partner with Provider Pathway. This really increases what we call the quality of care. Provider Pathway offers a broad range of services to help meet the long-term care needs of our policyholders. But what's beautiful about this, it also includes family members that don't even have policies with John Hancock. So I'll tell you a quick story. I've been in the business 27 years. I've been a perennial all-star with John Hancock. We average, close to probably $50 million a year in target premium. We do a lot of business. So I know what I'm doing. But God forbid, if I was to be hit with an LTC claim, I'm not sure I would know where to start. So we can call basically Provider Pathway. It's free. You can call as often as you want, and they would map out a game plan for me, who to call, where to go, what to do. We just had a case where I received a letter from a woman who was a policyholder with John Hancock. She was fine, but her mother, who was forgetful, developed full-blown Alzheimer's. She didn't know what to do for her mother. She knew that she couldn't take care of her mother in her house, and she wanted options. She called the Provider Pathway. The pathway mapped out a whole game plan for her mother, who's not even a policyholder, and even found a provider and negotiated a discounted deal and rate for her mother. So it's a phenomenal service. I can't underscore the importance of this partnership with Provider Pathway. And this is what separates us from our competitors. So here's another thing, is our price advantage. I touched upon that earlier. Our base product is generally less expensive than any other base product in the industry, and our rider is less expensive. So what you're seeing in this example is we can add our long-term care rider to this 65-year-old female for $750,000 of death benefit, and with the rider, our premium is $13,581. We're generally the same price or cheaper than any of our competitors without them even adding the rider. Once they add the rider, you see what their price increases are, and it's not even close. Lower cost, greater maximum monthly benefit, because we're not subject to the IRS limits. So I think it's a very strong slide. Cash value. We're seeing a lot of long-term care riders now added to our index product. So the beauty of adding into our index product is that, it's an all-in-one product, tax-deferred growth, tax-free income. It's asset protected, and now it protects them for LTC. And we're going to get into the new product, which it built, that is a game changer, in a few minutes. But I want to talk about how it works from a cash value standpoint if you're on claim. So one, remember, our LTC rider is guaranteed even if you sell on a non-guaranteed product. And if we want to compare it to Nationwide, who's my biggest competitor in this space, Nationwide reduces the cash value equal to the amount of the claim. So if I pull out $100,000, my cash value goes down 100. We go down proportionally. So in this example, we had a male 55, $500,000 of death benefit, a 2% rider. So 2% gets them 10 grand a month. So let's assume for a whole year, we pulled out the maximum. So it's $120,000. If our cash value was $192,000, it will roughly go down the same percentage. The face amount went down, which is around 20%. So our cash value is $149. Nationwide, if the cash value is $184 and we accelerated $120, it goes down by $120,000, which is $71,000. That will destroy your index product. And that's how most LTC riders work and how their impact is on cash. Ours is not. A huge advantage. I just want to talk briefly about the differential between indemnity and reimbursement. For indemnity, some people like the idea of having their sister, their husband, a family member take care of the insured who's needing long-term care assistance. But it's really a conundrum if you think about it. We have so many informal caregivers in the United States, and the reason, candidly, is because very few people have the funding to pay for long-term care. They either have to, pay for it, or B, provide the care themselves. But the reason that people who can afford buy LTC is to take the responsibility off of their family. If they're taking the responsibility off of their family, do they really want to spend extra money to have an indemnity contract, which is going to put the onus right back on the family members? And this is per Nationwide, and I love using their charts. Basically, they're saying that The caregiver, unfortunately, by having to provide care, it creates additional stress on them, emotional stress, anger and anxiety, escalated substance abuse, and higher mortality rates. Caregivers are 2 times more likely to say their overall health is poor versus the general population, and 40% of the sole caregivers predecease the patient for which they're caring. So does a mom or dad want their daughter to take care of them and develop extra stress, anxiety, and predecease them because of all the stress and work that's involved in having to take care of them? So taking care of chronically ill individuals make healthy caregivers chronically ill. So does an indemnity plan benefit that? So this is, I thought, also extremely powerful. 83% of the adults haven't talked to their children about their plan to address health care needs in retirement because A, they don't want them to worry, and 2, believe it's a personal issue. So would it make sense that parents want their children to provide care for them and spend an extra 20 to 50% on an indemnity contract that, again, forces their child, who maybe lives in a different state, to have to quit their job and come take care of them? So what can you do for the fact that our premiums are 20 to 50% less? You could buy a greater LTC policy, right? More death benefit, bigger LTC benefit. You can fund an HSA to pay for LTC expenses during the elimination period. You can fund a side account to pay for incidentals and non-related LTC expenses, such as transportation and other things. And you can add the critical illness benefit rider, which we're going to talk about in a minute, and still pay a lower premium. Why give it to an insurance company? So we feel very strong and we're very proud about our reimbursement model and our very inexpensive and fully guaranteed LTC rider. I want to talk to you about combining now LTC with Vitality. This is a home run. I talk about this way, Bill. I talk about, it's World Cup. I don't know why I got a baseball analogy. I should probably have a World Cup soccer analogy, but I call the single play, the double play, and the triple play. So the single play is the old way of doing insurance. This 55-year-old for $1 million, she paid $9,400 a year. When she dies, she gets a death benefit. The double play basically is you add the long-term care rider. And now if she lives too long, if she's one of the clients that lives too long, she now can access up to $20,000 a month, the full $1 million, to reimburse for LTC expenses. And the premium goes from $9,400 to $10,100. But if we now add the long-term care rider and Vitality and assume gold, she's going to live a longer life through Vitality. She's going to get up to $20,000 a month for LTC. She's got the $1 million death benefit, and the premium goes down to $9,200. The Vitality discount at 10% is greater, candidly, than the LTC cost, which is 7 to 9%. So her premium, vanilla, is $9,400. With LTC, $10,100. With LTC and Vitality is $9,200. So essentially, you're able to get your clients a free, qualified, true LTC rider. You increased your target by 10% by adding the LTC rider, and John Hancock's going to pay you an extra 10% by adding Vitality, and they're also going to get all the goodies involved with Vitality for shopping, entertainment, travel, and again, extending their life. Okay, we have a brand new rider. I know Bill was super excited about this, called the Critical Illness Benefit Rider. So the good news is that many illnesses that were once considered fatal are now highly treatable, and clients are recovering. The bad news, the cost of survival and recovery can be very expensive. This is kind of sobering, but 40% of the people will be diagnosed with some form of cancer in their life. And the positive, again, is that 14.5 million clients who were diagnosed with cancer have survived, and they're living beyond cancer. So during that time, though, where they have to go through radiation, treatment, rehabilitation, what's happening to lost wages? What's happening to the gaps in health, the cover gaps in health insurance? What's happening to their businesses? What's happening to their lifestyle? What's happening to their financial contributions towards retirement? In other words, if you get sick, your focus naturally is on recovery, is on your health. And if you're the breadwinner, if you run a business, your focus isn't on generating revenue for your business, your focus is on getting better. And because of that, there's going to be lost wages, change in lifestyle. So wouldn't it be helpful if you could receive a lump sum benefit, tax-free, up to $250,000 30 days after initial diagnosis of a covered critical illness. And that money can be used any way you see fit. It can be used to cover medical expenses, can be used to, put away for retirement, could be used to hire additional employees if you're a business owner, or bonus the people who are helping you. It can be used to go on a vacation. But the beauty here with this is it preserves the death benefit. It's the only rider of its kind. It doesn't cannibalize the death benefit. This is above and beyond your death benefit. Your death benefit stays fully intact. Bottom line, it provides clients a lump sum tax-free benefit that protects your client's standard of living and their lifestyle. I don't think any one of us would, God forbid, if we went through such a terrible event, would mind getting up to an extra $250,000 tax-free. So the issue ages are 18 to 65, and we define the critical illnesses. There's 7 of them that we define: cancer, heart attack, stroke, coronary artery bypass graft, kidney failure, major organ failure, or paralysis. So you have a diagnosis of any of those 7 critical illnesses. 30 days after diagnosis, that's the waiting period, we will pay out a lump sum tax-free above and beyond your death benefit. Okay? You can choose 10 or 25% of the face amount in terms of the rider. So if you have $1 million contract, a 10% critical illness benefit rider would give you an extra $100,000. 25% would give you an extra $250,000. $250,000 is the max benefit. So you can do a $10 million policy and add the rider at 25%, but the most you'll get is $250,000. The rider and its charges terminate at the earlier of 5 years or age, at the greater of 5 years or age 65. So if the client's 40, they have the rider till they're 65. If they're 65, they have the rider till they're 70. So it's basically available for the greater of 5 years or age 65. The rider charges are fully commissionable. The 10% rider generally has the target go up by 10%, and the 25% rider has the target go up, give or take, around 20%. And again, it's underwritten as part of the insurance process. It's one extra page that we look at. So let's take a quick example, and then we're going to jump into our index product. So in this case, we had a male 55, preferred non-smoker. We're looking at $1 million of death benefit, and they were going to add a 10% critical illness rider. So what that means is if the client got diagnosed with cancer, heart attack, stroke, kidney failure, just one of these, major organ failure, a coronary artery bypass graft, or paralysis, essentially 30 days after diagnosis, they would get an extra $100,000 above the $1 million paid in a lump sum tax-free. The premium was $10,779. When they added the 10% rider, the premium roughly goes up by 10%. It goes to $11,901. If we add the vitality rider, then you get a 10% discount, which brings our premium back to what it was, $10,800, like $100 more. You made an extra 10% target, and you make an extra 10% for selling vitality. And now you're giving your client a living benefit that's going to help maintain his lifestyle if he suffers a critical illness. This is a combination of adding now the long-term care rider and the critical illness rider as well as vitality. Again, the base premium is $10,700. You add the critical illness rider, it goes to $11,900. You add the LTC rider at 2%, it goes to $13,200. You add the vitality rider, it goes back down to $12,000. Now, you increased your target by 20%, 10 for the critical illness rider, 10 for the LTC rider, and you've got another 10% for the vitality bonus. So you essentially took a $10,000 target and increased it to $13,000, which is a 30% increase. It's phenomenal. And you're now helping your clients if they live too long, if they get sick, and protecting them and helping them and rewarding them for living a longer life. I just think it's a phenomenal story. And we have this rider available right now on our accumulation IUL. We have it available essentially on our protection IUL and our protection UL. And now just kind of bring it all together here, I think these are very important facts. A female is just as likely to have essentially a critical illness before retirement as she is to have an LTC claim. And a male essentially is 2 times as likely to have a critical illness event than an LTC claim prior to retirement. I think it's also worth noting that you're 10 times more likely to have a critical illness than die prior to age 65. And because our LTC rider is so inexpensive, and because our base products are so inexpensive, what this chart basically shows you is whether you're male or female, you can add our LTC rider and the critical illness rider. And with both riders, we will be less expensive still, generally speaking, than any other company with just their long-term care rider. So essentially, you're able to give the clients a free critical illness benefit rider or a free LTC rider. You can give them both riders, and we're still less expensive than everyone else with just their LTC rider attached. Okay, the final part of this presentation that we're going to wrap up is our accumulation IUL 18 product. This, guys, is a game changer. I actually have a case in underwriting myself on my own life. That's how excited I am. I do own Hancock policies. Haven't bought one in a couple of years. This one I'm racing to the finish line. This product's going to provide, essentially growth, safety, control, and flexibility. It's unmatched in the industry. This chart, I'm not sure if you even have this chart in here, but it kind of shows you our positioning. We're generally number 1 or 2, whether you do a short pay, whether you pay to retirement, whether you use the maximum NAIC rates, the maximum AIG rates, or whether you use essentially, however you design this, we're going to show up generally 1, 2, sometimes 3. It's a game-changing product. The key here is the multipliers, and we also added a new high cap account that I'm going to talk about in a minute. So the beauty here is the product performs well, even if the market doesn't. When you buy an index product, I don't care what anyone says, you're buying it for the downside protection. That's the attraction of this product. So we know you're not going to ever get a linear return, right? You can illustrate at 6%. We're never going to get a 6% straight linear return. So the closer we can make the return linear, appear linear, look linear, feel linear, the greater protection for your clients. And we were able to accomplish that by putting these guaranteed multipliers in. And the beauty is that our contract performs well, even if the market doesn't cooperate. So on this male 45, 5-pay, using the max AG 49 rates, we're going to pull maximum income out for 20 years at retirement. John Hancock, you'll see here, is the sales leader. I'll be very candid with you. Pac Life is very strong. And on paper, Pac Life is still very strong. We have slides that we show we're better than Pac, which is accurate. There might be some SLs where they're better than us. But we're neck and neck with Pac. We have a much stronger story. And we're going to get into that into a minute as to why. But what this will show you is that at the max rates, we're going to be as competitive as anyone. But if we get lower rates, we're still competitive. What it shows you here is if the market should perform at 4%, we're still, albeit much lower income, we still are providing income, where these other companies, whether it's PAC, Nationwide, Minnesota, Allianz, or Symetra, they fall off completely and provide absolutely no income. We also, the safe harbor for all index products are your fixed accounts. And if we move our money into the fixed account and we do a solve, yes, we're going to get lower income, but the beauty here is that we are still very competitive. We have a current rate of 4.2. We'll get into that in a minute, but essentially the fixed account, we perform better than the competition because we don't charge the same loads and fees in our fixed account than we would if you're in the index choices. And to me, that's key because you do need a good fixed account as a safe harbor when you sell an index product in case option pricing gets wonky or the market goes sideways. It's a good escape hatch. It's a good diversification option. And you need to have a fixed account that performs well. And this slide clearly shows that ours does. Okay, the secret sauce is the multipliers. And I'm going to pick on Pac Life for a second. All illustrations assume that there are bonuses or index multipliers built into their illustrations. Pac Life, for example, has them. If you ask them when they start, they might say year 2, they might say year 3. It's a little complicated, they say. Are they guaranteed? No, they're not. Our multipliers make it really simple. They're guaranteed, and they start in year 1. Couldn't be easier than that. So that means you'll see it in this middle column here, guaranteed multipliers. Those rates can never change contractually. The other advantage is the multipliers allow you to get above the caps. So, for example, we have our cap account is based on the S&P. It's a 1-year segment, annual point to point. So if the S&P is 100% participation rate guaranteed. So if the S&P should turn, please, guys, are we still connected?
Yes,
Looks like
we are.
looks like we lost your screen. You may have to log back in.
Okay. So my screen is not there?
No. Mm-mm.
Okay. What would I need to do? Would I need to turn the computer off and turn it back on?
Yeah, let's just do this, Andrew. We have a few minutes left. I don't know what happened. Do you want to just give everyone just a little overview, and then we can close it out, and we'll reschedule another call? Do you want to touch on just a few things? Okay.
Yeah,
just while we have everybody on.
Yeah, so very quickly, and I think we've got to the bulk of it, so it's good enough. The long and the short basically is the multipliers allow you to exceed the cap. So if you can just visualize this, if the S&P, if our cap account has a 10.25% cap, and the S&P does 10%, your clients will get a 10% return. But then they'll also get a 55% multiplier of the 10%, which brings them to 15.55%. So how can you tell your clients a 10% S&P return turns into 15.55 with our product? And they still have a floor of 0. So we have another account called the high capped account. The high cap has among the highest cap in the industry. That cap is 14.5%. So that account has a guaranteed multiplier of 30%. So if the S&P should do 20, your clients get 14.5% plus another 30% on top of that, which brings them to 18.85%. Bill, how exciting is it to have a product where you get tax-deferred growth, you get tax-free income, it's asset protected in many states, including Florida, it's self-completing with the death benefit, and you can get returns as high as potentially 19% with a floor of 0. We even have one account called the high participation rate. So instead of getting just 100% participation, you get 160% participation. 160% participation means that if the S&P returns 5, you get 160 at 5, which is 8. And then you get a guaranteed multiplier of 55%, which turns that into 13%. Imagine telling your client that you can turn a 5% S&P return into 13% and guarantee them a floor of 0. And you can allocate among all these different options. So what makes this a game changer, candidly, Bill, is that we're able to essentially provide phenomenal upside, still with a floor of 0, and within this beautiful tax-free wrapper. And the result is we're able to provide greater cash, which will produce greater income distributions. You can add the long-term care rider to this product. You can add the critical illness benefit rider to this product. You can certainly add vitality. So the targets are among the highest in the industry. The income is among the best in the industry. We have wash loans available after year 10, and we have index loans, which you can run as well. This product is wonderful as a supplemental for retirement. Product for retirement. It's also great for premium financing. So it really is a game changer. And the key is the loads are about a quarter of what Pac Life's are. So I'm not knocking Pac Life, but if you're selling Pac Life, their charges are 4 times more expensive. No exaggeration. I'm sorry you can't see that slide. Their multipliers are not available in year 1. They're available in years 2 or 3, and they're not guaranteed. Ours start in year 1, and they're fully guaranteed. And we have greater upside and greater flexibility. We also have a CVE rider, which allows you to spread your commission over 4 years to get higher, earlier cash value, which could be ideal depending on the ownership or whether you're going to do premium financing or not. So, Bill, that kind of was the main focus. What we didn't have a chance to show were a lot of slides that essentially compare us to whether it's Allianz or Nationwide or Symetra or AIG. And it's not even close in terms of dollars coming in versus dollars going out. And we have a wonderful program where when you run your illustrations for your agents, or if you're asking us to do so, we have an instant optional report. You just run your illustration and press this button for our life insurance and retirement planning, and it summarizes the illustration. It shows you paid 20 grand for 20 years, so you paid 400 in, and you're able to pull out, just making numbers up, maybe 80,000 a year for 20 years. So you put in 400, you pull out 1.6. If you died at the end of that income stream, there's another 200,000 of death benefit. The combined IRR is 9%, which is equivalent to like 14% pre-tax. So it's a wonderful one-pager that kind of summarizes it all. So we're super excited, candidly, about our LTC rider. the critical illness benefit rider, the 10% vitality bonus, and the vitality is really a game changer, and this brand new index product, which is really taking the industry by storm. It is, at least for right now, Bill, the number one index product in the industry, and the independent reviews from people such as Bobby Samuelson could have been, given greater praise to the product. So I'm sorry my slides petered out, but I think we're, like I said, nearing the end anyway. So
yeah, no problem at all. In fact, we're going to email everyone that's on the call some of these brochures and, of course, contracting, and make sure everyone is up to speed. And then, of course, call us or email us for any questions. We can even get Andrew on a call with us as well. So please don't hesitate. Andrew, that was phenomenal. So great job. We had a great, huge number of agents on. Participation was high, which we always love. So thank you for that. We have a couple more slides left, and then we're going to wrap up. So real quick, if you already have a Hancock contract, no problem at all. What we'll do is include licensing in today's thank you email. And of course, that qualifies for the cash for contracting incentive. So we will match or beat your existing grid. Plus, you're going to get anywhere between $100 and $400 cash with your first application. Okay, so if you're interested in that incentive, just let us know. We will make sure you are up and running. Okay, so real quick, I know we only have a couple minutes left, and then we're going to announce the winner of the tablet. So the 100th registrant, we'll announce that in 2 minutes here. Agency Automator. We have been working on this over 2 years now. And finally, okay, 2.0 is launched. And what does Agency Automator 2.0 mean? I'm going to just tell you real quick in the essence of time. If you can think about a brand new Agency Automator 2.0, okay, from the ground up, almost like a restoration or renovation on a vehicle, brand new, everything is new from the wheels to the roof, okay? In the past, Agency Automator was our CRM tool and prospecting tool. Now we have built in various legs. So think of Agency Automator as the umbrella. We have 4 legs coming out of it. The top left side is the website builder. This is free for you. Okay, this is a retail site where you can have your free quoting engine, real-time lead capture, calculators, articles, everything is built in, all at no charge. Okay, then another leg coming out is your prospecting tool and free CRM tool. And then your third leg will be the virtual assistant. Okay, you can use this live, real human, okay, as much or as little as you would like every month. To set appointments for you, invite your consumers or prospects to a seminar or webinar, anything that you want to do, totally up to you. The fourth leg is the recruiting tool. So this is used to build your downline. You can go in the library and pick any one of our marketing pieces or create your own and start to recruit and build your very own downline. Sit back and make a nice, healthy override on any business that's written. On the right side, we just give you an overview of the free website builder. On the bottom right side, that's just a funnel that shows you how you send and track your email blasts and how to keep your name in front of your prospects and clients by using all of our great technology. In fact, we're going to be featured. We're on the cover of Insurance Newsnet in August, and we talk all about the Agency Automator, and the whole purpose of the story and the cover story is all about how Levinson has taken agents to the next level by utilizing the latest and greatest technology. So we're very, very proud of this. It's our claim to fame, and you won't find this anywhere else, especially it's 100% free if you're an active agent writing at least an app per month. Okay, Joe's going to give you a 100-foot overview of the new retail free agent website builder. Joe?
Yeah, thanks, Bill. So I just want to show everyone real quick here the new website, kind of get a feel for it. It's got a completely custom design. You can change all the features on the website. This in the middle there, we've got a very, very easy turnkey setup. Once you get that Automator platform up and running, you can literally make changes and publish your website in a matter of about 10-15 minutes. You can then change it on the fly and also update, add videos, articles, even some of our Sell While You Sleep products, you can change those on the fly. So very, very easy to use. Also, that online sales hub is one of a kind between those exclusive products that we've developed as part of that Sell While You Sleep platform. You now have that online shopping cart experience where clients can actually go to your website, run quotes, and even apply for coverage, across multiple product lines. We even have some products that have instant approval, and that client receives their policy in their inbox in just a couple hours. So really, really neat technology there. It's right at your fingertips. We've done all the back office work for you to make that happen. I know we covered a lot of material today. I just want to briefly say in that welcome email you'll receive this afternoon, and with all that information that we covered is going to be our infographics. We have one on marketing, which covers every single part of the iGenius platform. We also have one on contracting to let you know how to add new carriers and process that online contracting platform to make sure you have all your appointments in order. And then we even have a new infographic on the new business side, so you can learn what to expect when you submit drop tickets or e-applications, and kind of know that entire underwriting process and how our new business team will coordinate with you to get your policies approved, issued, and delivered so you can get paid as quickly as possible.
Okay, good stuff, Joe. So the name of the game is simplify, okay? We're trying to make your lives easier by putting together these infographics, these trainings. There's so many moving parts with all of these carriers and products and tools, and we don't want to overwhelm anyone, which is the reason why we've put a lot of resources and time and hard dollars into these infographics and trainings and videos to make your lives easier. But it's up to you to put in the time and effort, okay? It's so important. You're saying to yourself, oh, I heard about this agency automator where I get 1,000 new prospects every month to turn these into, it sounds so confusing. That's all they talk about. But the point is, it's up to you. Take 30, 45 minutes and jump in one of our live trainings so you can see what this is about and start to utilize this free tool. It makes perfect sense. These days, everything is done with e-blasts and CRM tools. It's either behind the scenes or it's in front of you. But if you go to a car dealership, if you go to the local library now, everything is done online. So you must get there with your own agency, because if your clients aren't looking for you online, guess what? Their children, okay, and their grandchildren are. So you have to be able to relate to all generations in order to be successful this day and age. And we all know how that works. We put together these easy trainings that you can log in anytime. So every Tuesday, Wednesday, and Thursday at 2 p.m. Eastern Time, we have these live trainings, and they're broken down by Tuesdays. It's the free website builder. Wednesday, it's all about getting your 1,000 prospects and the recruiting platform, okay? Thursdays is just the CRM program. So I suggest you jump on all three, but these go on every single week, okay? And we have our programmer live. You can jump in, you can ask questions. Now, along the lines of that, okay, thinking technology now, we all must be familiar with, if you look at the very bottom, we have to know the basics around drop tickets, e-applications, electronic policy delivery, and DocuSign, okay? We all must know the basics. We're making sure all of our staff, all of our agents, all of our agencies are on this training. It's next Monday, so it's July 7th at 2 p.m. Eastern. I really hope you spend 30 minutes with us on Monday. I know it's right before the holiday, but this is so important for you to maintain and grow your business, okay? We're going to talk about the basics. We're going to break it down and make it very simple so everyone understands this new technology and knows at least enough to be dangerous. So when your client brings this up, you know how to answer. Okay, we're going to end with this. First of all, I just want to say, Hancock, great solution for life with living benefit riders, hot new IUL. Also, their ratings are incredible. So if you're working with an estate planning attorney, CPAs are involved, make sure you give Hancock a shot. Call us. We'll quote them for you. We're going to compare them against all of our top products, and if they look the best and are the best for your particular situation, then we'll show and sell them. So we'll leave it up to you with that. But take advantage of cash for contracting if you're already appointed, because obviously you will match or beat your commissions and you'll get a cash incentive. Okay, so the 100th registrant for the free tablet, we'll mail that out this afternoon, is D. Eastman. Okay, the last name Eastman. Congratulations. We'll mail that out this afternoon. So we're going to end with our Positive Tuesday quote that runs live on all of our Levinson social media outlets. We've all heard of the law of attraction, right? The Secrets, one of Oprah's favorite books. So, you know, yes, we all want to make sure we're in the right state, and we all want to make sure the secret does its job, and we have our vision boards and everything looks and feels great, okay? But the bottom line is it's no magic here, okay? We must put in the work if the law of attraction works and the secret works. So last Tuesday, I mentioned this for our live quote. The secret only works if you do, okay? The proof is in the pudding. So put your right foot forward, put it all together, make it happen, okay? As you see my hashtag, positive everything. That's what makes the clock go round. Let's all make sure we put the effort and time in, learn the tools and technology. With that said, have a great rest of the week, a good weekend, and of course, great selling. Take care, and thanks again.